You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO This Week in Futures Options, the program where we break it all down in the world of futures and futures options, everything cooking over there at CME this week. My name is Mark Longo from theoptionsinsider.com. Reminding you, of course, you can get these reports we're going to talk about on the show here live and free whenever the heck you want. Just go to cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those are the best places to go. If you want to check fluid milk options at 3 a.m. on Saturday, no one's going to judge. They're not just live during the show. They're live all week long. And, of course, if you want to go above and beyond, to check out the live chat, join us for all the exclusive shows, the giveaways, everything else, you know where to go, theoptioninsider.com/secret club. Shh, it's a secret. All right. And let's see who's joining me today to help entertain you Secret Club folks and everybody else out there listening after the fact. We've got the once and future Dr. Vix himself, Mr. Russell Rhodes. Mr. Rhodes, welcome back to TWIFO, sir. It has been too long.
It has been a while. So did your producer tell you this is the last time you're going to be able to call me the...
I have heard the rumor that the official doctoring is imminent, sir.
The defense is next Wednesday. I'm not sleeping. I'm losing weight. Oh, my goodness. Yeah. I'm a mess.
That's as hardcore as it gets in the world of academia, sir. They're going to come at you.
It does.
Slings and arrows.
It really is worse than writing a book. That's all I can say.
Interesting.
I know about that.
I've never defended a dissertation, so I cannot speak to it, but it sounds intense. Did our producers also inform you, though, that once you have a nickname locked in here on the network, it is very difficult to change it, especially since your nickname is both a reference to your upcoming doctorate, but also a literary allusion. So it works on multiple fronts. So it probably will stick after you are a doctor.
It'll be the future Dr. Vicks from the past.
Yes, exactly. You are aging backwards through time, and you are also a wizard. I bet you didn't know that. All right, let's kick things off the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything moving to the light side, a.k.a. the upside, and to the dark side over there at CME this week. This is the one report that you can't access via that TWIFO link, but you're lucky. The folks at CME always tweet it out immediately before the show, and we always retweet it there as well. So if you follow either of us on social media, you can get access to it for yourself. Looking like an interesting week out there, given everything that's been going on. Remember, we were off last week for the Thanksgiving Day holiday, listeners. So a lot to get to on the show this week. Mr. RHOADS, where should we begin our journey this week? To the light side or to the dark side, sir?
Oh, let's go light side, because I'm really looking forward to the dark side.
Yeah, a lot of dark side floating around out there.
I know.
We don't need extra on the show. We don't need to welcome it with open arms. All right, to the light side we go. Number 5, by the way, looks mostly biased towards the dark side. I'd say roughly 2/3 dark, but the extreme moves, there's a pretty good contest for the most extreme mover this week to the light side and to the dark side, even though the dark side does take it, but we'll get there in a little bit. Number 5 to the upside this week, the old peso. Don't get that on the show very often. Up nearly 2.5% this past week. Number 4, our old friend Bitcoin gaining a little bit back after the sell-off out there, up 4.3%. It was number 2 in the other direction on our last show 2 weeks ago, which was off. It was off nearly 10% at that point, 9.83%. So Bitcoin recovering a little bit of that dark side there. Eurodollar is up 5.88%. It was number 1 to the dark side a couple of weeks ago on the show as well. So Eurodollars have been moving a wee bit as Powell and others have been waxing poetic on all things rates. Number 2. Another frequent offender in the big mover to the upside and to the dark side seat, that is iron ore, up 9.25% this week. And number 1, another frequent offender of the year here. If you had to guess what is the leading the dance in either direction any given week, this name you could reasonably guess and have a decent chance of being right. It is lumber, up 15.9%. It was also number 1 to the upside 2 weeks ago on our last show, up a whopping 36.23%. And again, before you get all fired up about talking some lumber, 13 contracts on the tape this week. So not a lot to parse there, but man, there is some movement. It would be nice. It would be oh so nice to have some options available on good old lumber. Then we go off to the dark side. The place Mr. RHOADS is scared to go. Number 5 to the dark side. By the way, it shows you how aggressive the dark side is when we got the Russell 2000. It's off nearly 3.5%, and not even in the bottom 5. It's only at number 9. So number 5 is actually Casey Wheat, off 5.81%. Number 4, we got Brent. Don't see Brent on the list too often, but it's there this week, off 6.16%. Number 3 to the beans, the soybean oil to be precise, off 6.57%. Numero 2, it's oats, off 7.22%. It was number 5 in the other direction on our last show, up 3.71%. And number 1 with the bullet, this is the other name you could guess reasonably any week, is number 1 in one direction or the other. And you have a good chance of being right. It is Nat Gas. It takes our crown for the biggest mover on the show this week, off 21.68% since our last show. It was number 3 in the other direction 2 weeks ago, up 4.09%. So Nat Gas coming in apocalyptically for all the bulls out there over the course of the past week and change. Since it's the big mover, it's the story. Everyone's talking about that and all things energy. I think we have to start there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, buddy. Welcome to the energy complex. Mr. RHOADS, I know you've been paying a lot of attention to the world of energy of late. I mean, the vol out there, we just saw it again this week. The vol out there is insurmountable. In fact, speaking of vol, before we get to that really quickly here, on our last show, we had our question of the week, which was, which of these is the most volatile tradable product? We gave you 4 choices: Tesla, Bitcoin, Nat Gas, and VIX. And you guys are all very savvy. You all chose by a very slight margin, 31.6%. You chose Nat Gas for number 1. Tesla came in second at 30.3%. And you guys are savvy because Nat Gas was the winner. It had a 96 vol at the time that we posted that. So we'll pull it up today and we'll see where Nat Gas is falling. But 96%. And then number 2 was actually Bitcoin with 78%. Number 3 was VIX with somewhere between a 65 and a 70%, depending on where you're looking. And number 4 was actually Tesla. Tesla was actually at the bottom of our list. So, Mr. Rhodes, Nat Gas trumped our poll a couple of weeks ago. It's leading our movers and shakers this week. What's catching your eye out there in the crazy world of energy, sir?
Well, I first off, my eyes off the ball a little bit these days, but I'll get back on the clock in about a week. I'm surprised that crude was not the biggest downside mover after what we saw, late last week. I guess natural gas goes along with it, but that was something that really, when you sent the list over a little while ago, that was the one that really surprised me dramatically. And then eventually, is lumber just going to stop going up and down? Is it going to stop the big zigzaggy thing? And why wasn't it on the survey for the top 4 most volatile things? Because the options don't trade that well?
There's no options, and we only have 4 choices. So we have to try to represent the broad gamut of trading options out there, right? So everybody loves Tesla. Everybody loves VIX. Got to throw a Bitcoin in there. It only leaves really one to play with, right?
Yeah. And no, but I mean, from what you hear coming out of Europe, you would think that natural gas would be going the opposite direction because isn't Putin planning on freezing everybody out this winter over there?
That is apparently the plan.
Yeah. So you would think, I don't know about you, but I would find that bullish. But, and if we're all going to be locked up and staying home, don't we have to heat our homes with the natural gas too? I'm having a hard time coming up with the bearish case for natural gas. That's all.
Apparently, sir, you are alone in your analysis because getting drubbed out there this week. Let's pull it up for ourselves and let's see what we can find out there. CMEgroup.com/TWIFO or /TWIO. Go into that asset class drop down, listeners. Go to energy. Then we're going to skip over crude oil for now. We can always get back there in a minute. And then go to Nat Gas. It's the first one you're going to see there. Let's see how much paper is on the tape this week. Decent week, 370,000 contracts are closing in on 400K. That's a decent level for all things Nat Gas. Coming into showtime, we're at a 4 handle, listeners, 410 out there in Nat Gas land. So that's it's a pretty low level compared to what we've seen out there in the past. And obviously the sell-off, again, over 20% since our just this past week. That report only goes back this past week. Listen, I'm sure if we extended it 2 weeks to our show, might be an even more dramatic story out there. But this show is called This Weekend, so we keep it to this week here. And in terms of where the action was, Nat Gas is no longer trading like an equity. It's all front month again, but it's not expiring in a day like it was recently when that contract was rolling off the board. Now we have a whopping 26 days to go in that Jan contract, which did nearly 40% of the paper this week, 39.3% of the paper. If you're wondering what Nat Gas vol is this week, 64.65 in that front contract. That's come off a ton, 30 points since that just shows it would not win in our poll right now. It would not win our poll by any means. A 64 vol would maybe barely edge out Tesla. I think we said it was at a 62, right? So that was about it. But other than that, it would not be the winner this week. Vol coming in apocalyptically as Nat Gas has come in quite a bit as well, off 1 1/3 points just since Monday's session. So 25% since Monday. And if you go back to Thursday of last week, then it would be 21, almost 22%. In terms of what the most active, before we get to the leading action, let's see. Vol, like I said, 64 and about 1/3, 2/3 actually. And skew-wise, let's see what's going on out here. We saw the puts last week were 7.7% cheap. This week, 16% cheap. So puts getting cheaper. Calls starting to awaken. They were 13.4% bid last week. This week, 14.2% bid. So we kind of have the polar opposite of an equity skew here going on. Puts are cheap, calls are bid. that is interesting given just how fast and how dramatically we have sold off here over the course of the past week. In terms of the action, though, what was the most active contract out here in nat gas this week? It was the 5 calls. So I said we're at about a 410 right now in that front future, listeners, but it was the 5 calls lighting it up pretty much all week long. 13, almost 14,000 of these bad boys going up. The big day was yesterday, 5,600, I should say, going up yesterday. Today, 4,700. So a pretty active day today as well. About 2,300 on Tuesday. Not much going on Monday. All of it pretty much opening this week. So maybe a little bit of opening call buying on the 5s at the end of the day, because that call skew did get bid up so much. It was followed pretty close behind it by the 6s. About 12,700 of those going up this week. The big day was yesterday as well. 3,900 yesterday, 3,000 today, 3,600 on Monday, and 2,100 on Tuesday. Opening most of the week there as well. So it looks like opening to the upside here in nat gas, hence why that skew is continuing to get a little bit big. Let's see if we can see any other outlandish strikes. Yeah, go all the way down to looks like about number 4 to find really the first put. I thought the 4 puts, given what we've seen over the course of the past week, would be a little bit more active, but only doing about 8,700 contracts. They come in at number 4 here in terms of the top 5 most active contracts in nat gas this week. Today's the busiest day on the 4 puts, 3,700 going up today, 2,400 on Wednesday, 2,200 on Tuesday, and only about 300 and change on Monday. Back and forth opening to closing all week as well. So no real bias to the puts here either, which is interesting. Mr. Rhodes, does that surprise you that it's mostly 5 and 6 calls this week that are leading the dance and not the puts, as you might assume, sir?
Not terribly. And it really is just, everybody's got in the back of their mind that inflation ain't going away. And Powell even told us that, didn't he, earlier this week? So I think you would expect the calls to be bid on just about anything that's going to, I hate to say benefit, because it's not a benefit to the rest of us, but is going to, rally if we continue to get what appears to be inflationary numbers. So I'm not, if you made me without looking, guess what most of the commodity skew looks like, I would definitely say to the upside these days.
And since you asked so nicely, Mr. Rhodes, our producers have obliged you and have dug up WTI for you. It is actually number 6. So it is right outside our top 5 here at negative 4.84. So I lost about 4.84%. So it would have almost made our top 5. I'd be curious maybe if our producers can run that for us, if they can go back 2 weeks to see how much. Obviously, it'd be a much bigger number than it would. Let's go out to the land of WTI next. While I'm pulling that up, Mr. Rhodes, what's been catching your eye? Obviously, for you and I, for a long time here on this show, the narrative was crude cannot catch a bid. The calls can't catch a bid. I don't care what they're doing, bombing the Saudi oil fields, whatever the hell's going on. Crude can't catch a bid. Then it did for the latter portion of this year, rallying all the way up into the 80 handle and now giving it up pretty aggressively. So obviously a lot's been going on. What's been catching your eye out there in WTI of late, sir?
I was surprised needless to say, I was surprised at how much it dropped. Also, the way that it went about dropping. The president came out and said, we're going to release some oil from the Strategic Petroleum Reserve, which when you look at it, it is like for lack of a better way to put it, a drop in the bucket. Really shouldn't have made that much of a difference. But then last Friday, we just got that just nasty move out of oil when all of a sudden everybody started getting a little worried about the Omicron. Am I pronouncing that right? Variant.
Omicron. Some people call it Unicron. Go back to the 80s, but yeah.
I'm gonna call it she, because that's the letter they skipped.
There we go. There we go. You sound like Matt on the advisor's option.
I know. I'm not going down that path at all. But I really was. You would have expected some pressure on oil. I was really surprised at how much it got hit late last week. Just based on not what has historically been considered that much market action. 2% sell off on the S&P 500 is not really that big of a deal. But the way that it showed up in the energy market was really surprising to me.
Well, let's break down that move for ourselves. Listeners, go to that drop down, pop out of nat gas, go up one slot to crude oil. You will find WTI out there. WTI reflecting Russell's assumption that it might be the big mover and shaker this week, putting up some numbers. 1.1 million contracts on the tape in WTI this week. My goodness, I can't remember the last time we saw an M in WTI out here. That's a lot of paper, listeners. Usually we'll see 400, maybe 600,000 on a pretty active week through this point by showtime. 1.1 million already through Thursday. That's a lot of paper, listeners. So people are coming to play right now in WTI. Coming into showtime, we're at about a 67.25 in that front Deech future that has, roughly a day to go. Let's go out a little bit. Let's go out to our, 39% of the paper went up in that Jan contract that has, a whopping 13 days to go. So it's right at our cusp of 2 weeks. I think we can hang out there because, again, 39% of 1.1 million contracts went up there. So that was certainly the volume leader this past week. That future also 67.25 right there. In terms of crude vol coming in a little bit this week as well, 55 and about a quarter, off about 8.25 points over the course of this past week. Skew wise, let's see. Yeah, it's all puts all the time now. So a market change from what we saw not too long ago out there in energy and WTI land. Last week, the puts were 16.6% bid. This week, 19.2%. So a huge bid to the downside in WTI. The calls, no one wants to touch them. Last week, they were 11.7% cheap. This week, 18.1% cheap. So calls coming in aggressively. Puts getting bid pretty aggressively. Kind of interesting. We didn't see that in the nat gas, but we are seeing that playing out here in crude oil. Again, this is a near-dated contract, so take some of those skew moves with a bit of a grain of salt, but still, that's where the paper is. We have to go there. And in terms of the most active contract this week, it was the 60 puts, leading the dance by a pretty significant margin. Let's just scroll down really quickly. Yep, this was the 60 puts. Nearly 30,000 contracts on the tape, about 28,000. The big day was Tuesday, 8,700, even though it looks like today might beat it if it keeps on this pace. Already 8,000 and change going up today. 7,000 on Monday, 4,100 on Wednesday. Back and forth opening and closing. Obviously, we don't know what the deal is with today's paper. So it's hard to tell what was up on these 60 puts net on the week. Followed by number 2, we got the 75 calls active pretty much all week long. The big day is actually today. Nearly 8,000 on the tape today. 7,200 on Wednesday. 5,300 on Tuesday. 4,800 on Monday. Opening pretty much all week. So that's interesting. Opening paper on the 75s. Are they continuing to crush it? The skew's coming in pretty aggressively, so you could certainly intuit that perhaps. Number 3, we got a bit of a tie between the 80 calls and the 65 puts, both doing about 21,800, 21,900 contracts or so. So about 100-odd contracts apart. The 80 calls are technically number 3, so we'll go there first. They have, like I said, about 21,900 contracts on the tape. The big day was Monday, 12,000. Then we have 4,000 on Wednesday and a tie between Tuesday and today with both about 2,900 on the tape. So a lot of paper, most of that opening earlier in the week, especially that big day of 12,000. So opening 80s, opening 75s this week. That's interesting. 65 puts a little bit nearer to the at the money strike there, doing about 22,000 contracts this week. The big day was Monday, 6,600 on the tape on Monday, followed by 5,600 on Tuesday, 5,000 today. So no slouch today, and 4,500 on Wednesday. This one, again, back and forth, opening and closing throughout the week. So, Mr. Rhodes, ain't that paper surprise you? And also the aggressive nature of that skew where it's just all puts all the time and the calls, no one wants to touch them. Does any of that surprise you, sir?
Yeah, it does. You would just think that with a lot of the other commodities seeing a call bid versus a put bid, that even with the dump in oil, the call that it would have at least held up and kind of held in line with the put side of the equation. Also, I don't think support for oil is anywhere close to where we are right now. And usually we see either the calls get bid or the puts get bid when we're testing a support or a resistance level. And I feel like supports, because we've had such a move to the upside in oil, that maybe supports at a little bit higher level. So typically it seems to take a little bit longer for that skew to shift. I can't, and I'm not on every week, but I can't really recall it shifting this quickly and this dramatically anytime that I have been on.
Well, we have seen the Omicron really kick in just last Friday, right? So it has been a very near-dated one. And you're right. Yeah, it is interesting to see that WTI, an impressive amount of paper out there, to say the least, as we keep on roll. Mr. Rhodes, you are our guest. We have hung out in energy for a bit. Where should we hang our hat next, sir?
Let's go to stocks. Stocks have been fun.
Stocks have been moving a little bit, so I think we can hang out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, I see all your questions coming in the live chat. Don't worry, we'll get to them. We'll get there. Don't you worry. Let's go on out now to the land of equities. You guys know where to go in the drop down there. Get out of energy. Go out to equity indices. Is actually just 2 notches below energy there in the asset class. Then go over to U.S. index. We're going to hang out in Russell 2000 first. And where we go beyond that is perhaps up to Mr. Rhodes. Mr. Rhodes, I know you spend a little bit of time looking at volatility. In fact, before we start that, let's set the table from a vol perspective, because a little bit more vols creeping in to the equity complex since our last show. Coming into the start of the show, we had RBX, which is the VIX of the Russell 2000, threatening a 40, listeners, 38.79, up nearly 15 handles, about 14 3/4 from our last show. I'll have to pull up and see where the high was for RVX over that time frame, but I'm going to wager it was above 40. VIX was at 28.5, about almost 28.60 when we kicked off the show, up about 11.5, almost 11.6 handles. I believe it topped out around 32 recently out there as well. VVIX 150. Yeah, we're back in that range, listeners. 150 3/4, up a whopping 40 points from our last show. A vol Q, aka the at the money vol of the NASDAQ 100, at about 25.5, puts it up about 7.5, almost 7.6 points from where it was this time last show. So vol in the equities up across the board, listeners. That VIX to RBX spread is now huge. It's 10.25 points, listeners. That's over 3, almost 3.25 points wider than it was on our last show. That's the widest we've seen it in quite some time. That's impressive. I need to dig into that a little bit more. VIX to vol Q at about a 3, little about 305. That actually puts it a little over 2, about 2.1 points wider. So both those spreads widening out as VIX is moving all over the place, but RVX keeping a pace, which is kind of interesting. Mr. Rhodes, let's start there. You are doing a dissertation on all things VIX. In fact, I do believe your VIX Trader's Handbook got a nice plug on our Options Bootcamp book club episode yesterday. So you're got a nice little twofer there. What's catching your eye, and what are your thoughts overall on this new regime of Omicron volatility? Is this here to stay or kind of a blip, sir?
Oh, I think it's kind of a blip. I think things will calm down in the next couple of weeks. It feels like the market has already been very much on edge. You know, we're always looking for an excuse or what is going to be the catalyst that pushes things lower. And, you know, on a very illiquid day last Friday, with most of the grown-up traders at home or hanging out with their families or whatever, we were able to get that spike in volatility. The follow-up has been a bit surprising to me. But the big fear for VIX traders is always that, you know, we're conditioned to fade that move to the upside. And that goes for Russell 2000 volatility, NASDAQ volatility, and S&P 500 volatility. You know, we've been conditioned to fade it whenever it spikes up, but the fear is always getting that second spike. And I wonder if that second spike caught some people by surprise, and that's why we are where we are right now. I don't know why Russell 2000 volatility is so elevated relative to S&P 500 volatility. December is by far the best month for small cap stocks. So, you know, I don't know if they're giving you a great opportunity to sell some call spreads or what on the Russell 2000. But if you're thinking about buying stocks here, I think that's the index that you would want to go after right now.
Yeah, it's funny. The last time you and I were on the show together, you were talking up that Santa Claus rally, and I think you were more right than even you thought. I mean, the thing kicked off almost as soon as we ended the show. Russell 2000 went to another level. It was insane. And then now, obviously, Omicron derailing that a little bit. Do you think that's just a little bit of a drag and we're going to get back into that Santa Claus mode, or is that dead for now?
I think it gave us an opportunity. I say that the Russell 2000 performs the best generally of those three big tradable derivative markets, the S&P 500 and the NASDAQ. I mean, it's something that I put on yesterday, but I got long RUT futures and short NASDAQ futures because December is typically pretty tough month for tech stocks, but also just the macro conditions that we're going into for 2022, where there is an expectation that we're going to have higher interest rates. That's going to have more negative impact on tech stocks than other sectors as well. So I think there's a seasonal argument there, but there's also a fundamental argument going into next year.
Yeah, it has been fascinating. Do you subscribe to this notion that the outperformance we saw until obviously this Omicron variant was unleashed last week, the outperformance that we saw in small caps was primarily due to some of these meme-heavy names getting in the rotation? Now you think something else was driving it, sir?
It's really tough for a single stock to have that much of an impact on the Russell 2000. I mean, none of them are really a big, just because of the way that they continuously rebalance it. None of them are like a big component like we see with the NASDAQ, 100, where Apple is 10 to 15% of the index, depending on what's going on in the markets. So I don't necessarily think that the meme thing is what's been lighting a fire under the Russell 2000. It's just more of we've had small cap underperformance off and on more often than not for about the last decade, and at some point it's going to catch up. There's also more of a value bent going into 2022, and there are more value stocks in the small cap index than there are in the large cap indexes as well. So I don't think it's necessarily a handful of individual names. It's just the general characteristics of the companies that are in the small cap indexes versus the large cap indexes.
There you go. All you people pointing your fingers at the meme kids, the AMCs and the games of the world. Russell says, no, as we keep on rolling. Let's go on out here to the drop down. Like I said, let's drop into Russell 2000. Pretty active week, almost 40,000 contracts on the tape already out. That's a lot for small caps by this time of the week. Obviously, equities are tearing it up right now. Coming into showtime, Russell 2000 just a wee bit north of the 2200 level, 2203.80 to be precise, off 39.5 handles just this week, nearly 2% just this week. So again, sell-off territory out there in the Russell 2000 after it has been just exploding. Is ridiculously before that. And unlike most episodes where we come in here and most equities, all of the paper is going away in about a day. Unlike most of those shows, Russell 2000 actually trading most of its paper in the D's contract, which has about 15 days to go. So we can firmly hang our hat out there. 36.1% of the volume going up out there this week. The vol out here in the D's contract, if you're wondering, listeners, 37.5. So that isn't that far off what we're seeing out there in the RBX, which is about a 38 3/4. So interesting stuff there. In terms of the skew, by the way, the vol up nearly 5 points just this week. Skew-wise, let's see what we got out here. Remember, we were talking before about some of the energy names as well. We were talking about in nat gas, no one wanted puts. In WTI, it was all puts. And now in the equities, the game is all puts all the time. And that is the case this week. The puts were 20.5% bid last week. This week, 22.5% bid. So even more juicy this week than last week. The calls last week were cheap, 14.7% cheap. This week, even cheaper, 15.3%. That goes back to the conversation we've had many times about why it's so prohibitive if you're out there just loading up on near out-of-the-money puts and then rolling them every month. Look how much extra juice you're paying out here. I mean, it gets pretty difficult, hence our recent episode on paying for puts over there on the advisor's option, including some interesting, dare I say it, devious ways to do that. Check out that episode if you are so inclined. You want to get some hedges on, but maybe don't want to pay that dramatically for them. In terms of the most active contract out here, there's usually two trends we typically see in the small caps. It is farther out, pretty far out of the money puts, and then pretty far out of the money nearer term calls. What we have this week is a little bit different. They're almost at the money puts, and they're going out in about 2 weeks. It's the 2170 puts. That's the closest strike we've seen on the put side to do any size in the Russell 2000 in quite some time. Again, usually we see it's a lot farther out of the money than that. So these are pretty close to at the money, going up pretty steadily all week long. A couple thousand of them going up here this week. The big days were yesterday and today. And both looks like opening mostly throughout the week. So opening on the 2170 puts. Again, I would not have expected that. Followed by the 2100 puts at number 2. The big day for those actually today. So a lot of puts going up on the 2100 strike. It's not all puts all the time. There are some calls. The 2400 calls, which at this point would probably qualify as a smaller delta, going up for the same level here this week. So that would be number 3. So interesting. 2400 calls, 2170 and 2100 puts. Interesting. Let's go really a little bit farther out. There is some paper going up in a day, as you would expect. It's the 22 half calls. These only doing about 1,000 or so this week. And looks like mostly these could certainly be considered small delta right now because they're going out in a day, but not a ton of paper as you would expect, given everyone's always asking, what about the near term small delta upside calls? Not as many of those on the tape, I should say, this week. Just scrolling down a little bit to see if we can see any other farther long-term paper. That seems to be pretty much the trend. 2400s going up later on in March of next year as well, but not a ton of them. 2500s going up in the end of month D's contract here. But outside of that, not a lot of weird stuff. Ain't this paper coming as a surprise to you at all, Mr. Rhodes, sir?
Do you think they're selling those puts? That's automatically when I see, implied vol up an awful lot, and maybe people looking at a way to, take advantage of some weakness. I make an assumption that, maybe somebody's selling the puts instead of buying the puts.
Since they are so close, closer to what we normally see, and it's closing throughout most of the week, it could easily be, selling to close type of paper. Okay. Yeah, that would make sense. That also would line up with what we're seeing from a skew perspective out here, where the puts are getting cheaper this week. We also saw some opening paper in the 2170s, so that's surprising. You think if it was a roll, it would be the other way. They'd be rolling from 2170 down to 2100. So we're seeing opening on 2170s and closing on the 2100 puts, which is kind of strange. But again, it's equities in a crazy week, so nothing can surprise me, sir. We got a bunch of questions coming in at us, Mr. Rhodes. You want to hit those, or you want to squeeze in one more complex first, sir? What do you? You're the guest. I'll let you choose.
I love fielding questions.
Oh, all right. Well, then buckle in. We got a few for you here.
Toes.
As we go on into the futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to your feedback. Let's set the table really quickly. I already paid off the poll question we had on the show last time. Let's go on out now to the question of the week this week, which is an interesting one, a contentious one, perhaps more contentious than we even thought, Mr. Rhodes, when we first posted. We came out on Monday and said, you think this vol has some legs, or is it a flash in the pan? Let's just look towards the end of the week. Keep it simple. You think VIX is going to close above or below 20? I think most people came in and thought this is going to be your typical flash in the pan. Vol pops, then it slowly erodes throughout the course of the week, and by the end of the week, we're probably somewhere at or maybe even below the 20 handle. Then, of course, Omicron changed the game. We had a rally on Monday, a sell-off on Tuesday, a rally, then a sell-off yesterday, and now today we're rallying yet again. So who knows what Omicron has? Can it sucker punch this rally again today? Who knows? All bets are off. Mr. Rhodes, if you have a bet, I welcome it. And then also, more importantly, what do you think our audience is voting for, sir?
Well, 20 is kind of a tough number now. So
it is more challenging now than it was on Monday, yes.
And I will tell you, if you had asked me this question on Monday, the last time we had a spike like this was January of this year, 2021. It took 4 days for it was like a 50-something% move, or maybe 60%, but it took 4 days for the whole thing to get retraced. So on Monday, I was on a different show. I'm sorry. I'm cheating on you every once in a while.
Oh, I'm sorry. Did I hang up on you? How did that possibly happen?
I would not be the least bit surprised if VIX is back below 20 by the end of the week. So on Monday, I would have said below 20, but now I would say above 20.
Funny what a difference 4 days makes in a weekly poll.
Especially these days.
Yes. But yes, you're right. I was leaning on that below 20. A lot of our audience was as well. Unfortunately, on Twitter, you can't, or probably maybe fortunately, I like the fact that it locks you in. Once you vote, you can't go back and change it. A lot of our people in the chat were saying earlier they would change their vote now, like Mr. Rhodes would if they could. But right now, Mr. Rhodes, it's still at almost 2/3 below 20, 62%, and about 38% for above 20. So a lot of that was the early voting. But maybe I'm surprised more people haven't jumped in to jump on the above 20 bandwagon now that we're hanging out there. But interesting. You got about a little bit less than a day left. Listeners, 21 hours. Get in there. Make your voices heard. Unless you already have, like Mr. Rhodes. In which case, you're locked in. But hey, who knows? We could see anything in this crazy world of all things Omicron, listeners. Hanging out at a 28 right now in VIX Cash. So an 8-point swing to the dark side. It's a lot, but crazier things have happened. All right, let's get on out now to the live chat. Mr. Rhodes, you're going to pinch hit for Dan Gramza here because he was on our pro Q&A session on Monday, and we got one of our secret club members, Mr. Luigi, was upset that he missed it. He missed it live. And I told him you always have to send your questions in ahead of time if you can't make it live because we were oversubscribed for Dan, as we always are, but we get a lot of questions for him. So he thought, okay, I'm going to ask him for Russell instead. So you're getting Dan Gramza's questions, Mr. Rhodes. Hopefully you could hang in the Dan Gramza seat. He's got a bunch for you. Let's go in order here. He first wants to know, are futures options better day traded or swing traded? And should you play closer to the fire than out of the money? Also was curious as to the contract expiration. If a DEES futures contract expires near the end of the month, is it better to place an options position near then, or would a leap type option be advisable? Let's start with that one, Mr. Rhodes. What are your thoughts? This is kind of a frequent question we get a lot here on this show. Futures options, is it better to kind of short-term them or more day traded, as he puts it, or swing traded? And should you play closer to the fire than out of the money? And also, how do you like to set it up from an expiration perspective? A lot of questions in there, sir. Have at them in any order you want.
I like to swing trade, which when I see swing trade, I think of 2 to 5 days, maybe an overnight to 5 days, but something within the same week. I like to be a little bit out of the money, and I tend to use the respective volatility index to give me an idea of how far out of the money I should go. Which, it's not a perfect tool, but it's an easy one just to plug in, which means if I were going to, let's just say I was thinking about selling a put spread because I think the Russell 2000 will rebound from here. I'm going to go a little bit out of the money because the RVX is up in the upper 30s right now. But I rarely do anything right at the money with option contracts, unless I'm selling an option against a longer term option position. But as far as swing trading goes, I like to be a half standard deviation, a standard deviation out of the money, and targeting expirations. Today's a Thursday. I wouldn't go beyond next Wednesday's expiration right now for the options that I like to trade.
All right. And the second part of this, I'd assume you're not a leap guy here, Mr. Rhodes.
I have done leaps in the past, but I always do leaps with the intent of continuously selling other options against those longer dated option contracts. And a perfect example is about 9 months ago, I bought some, more than 9 months, I think back in February, I bought some December silver calls that didn't have a whole ton of time value to them. I've lost money on those calls, but I've made enough periodically selling at the money options against it to basically about break even on the trade. At this point, I'm just hoping for a spike in the price of silver going into the end of the year, or at least the third Friday of this month. So I do that, but that's if I've got a longer term directional outlook. If I can do it without giving up a whole lot of time value and there's an opportunity to sell premium against that position over time.
Yeah, that's kind of my preferred use case for leaps as well. As more of a stock substitution and then
Exactly.
underlying substitution. And then you're right, you're writing some premium against it. Brian over there on OPR loves this strategy, calls it the fig leaf because you're semi-covered. It's not really a covered call, but it's kind of like doing a covered call. It's got all sorts of capital efficiencies to benefit versus buying the underlying there. So that's kind of my use case for that as well. All right, second part of his question. He says, I took your advice, Mark. I sold my position in GTBC, which is, of course, the Grayscale Bitcoin Trust listeners, and added a position in BITO, which is the ProShares Bitcoin ETF, which, of course, trades the futures over there at CME. He says, made a lot sense to wheel in and out of BITO instead of buying and holding Grayscale Trust. My only question is if the monthly roll of the futures contract is going to affect that strategy. Well, yeah, a lot to unpack there. We were discussing this earlier this week we had a question similar to this on the advisor's option as well about Grayscale and BITO and whether wheels were attractive out there. And I pointed out that you're not going to get the bang for the buck on the put side. That's usually the use case people have in the equity landscape for wheels. They really want to sell the put. I don't think they come in with the intention to sell the call. They turn around and sell the call if they get caught holding the stock. But their real intention is to get that put juice and sell the put. You're not going to get that in a BITO. Instead, it's going to be the other way around. The name of the game is really selling the call. That's where the juice is. In fact, I just pulled up BITO monthly options right now. It's hanging about 36 and a quarter right now. You could buy the 35 puts for around $1.50 and easily sell the 38 calls if you did it all in the same month for that same level. So you're getting almost 2 points of upside and only about a point really of downside out there. But you could play around that obviously a lot more too. So that was Matt's thought and my thought as well, is that the puts are comparatively cheap. So you may think about really looking at BITO as more of a commodity type product, like we see the ags and the metals where there's a tremendous bid to the upside and the puts are comparatively cheap, which makes them attractive for collaring. And that's why I think the real use case, you could certainly use the puts to get into BITO. No one's going to hold that against you. But you're not getting a ton of juice for that. The second leg of that is where the attractive level is. So maybe once you get that leg, you could turn around, write the covered call certainly against it. And then if you are so inclined, you can even buy some protection to lock that in. The nice thing, second part of your question about the drag, the nice thing about that, we had Russell on a while ago. He thought it was about 1%. We've since have had the ProShares folks on, and I crunched it, and Matt crunched it a little bit later as well. It does seem like those numbers are less than that now. The ProShares folks thought it was probably going to come in probably closer to half of that, somewhere around 0.5%. And I think that's pretty much more along the lines of what we're seeing. So the nice thing is the drag, not as huge of an albatross around your neck as we initially thought. This is not going to be like a VXX or anything like that. So you can buy and hold it with a little bit more security. You probably do want to do something against it, and that those covered calls are extremely attractive out there. So I think that makes a lot of sense. Mr. Rhodes, what are your thoughts in general, now that we have a little bit more time under our belt, on all things BITO versus the Grayscale Trust? Do you have a preference? What are your thoughts on the drag numbers that I mentioned? Do you think those are in line, or do you have some updated numbers for those? And what are your thoughts on the wheel strategy with BITO, sir? A lot to unpack.
Well, I know, a lot to unpack. Well, first off, the drag is it just has not developed like we thought it might. And one of the reasons that we wanted to do a wait and see here was that before we got VXX, the VIX futures didn't really act the way they do now. It was kind of a structural change where all of a sudden the front month we started seeing steeper contango after VXX came out. And there wasn't that 1% that I guessed was based on the spread between, right now it would be December and January, the spread between those two widening out. And it just has not happened yet. It's been in the 0.5 to 0.7% range anytime that I check it. Now, one of the funny things that I just came across, which makes me wonder if I got to do more work on this. And so this is definitely not advice, but I'm looking at December, January, and February, and the January future, the one that BITO would need to buy right now, is at a slight premium to the February future. And I wonder, if that is an opportunity to get ahead of January becoming the front month and February becoming the second month for BITO, because when that happens, they should flip places. Maybe not dramatically, but they still should. The January contract should probably go to a discount relative to the February contract, like December is relative to January right now. There still might be something to do curve-wise, and I know that's completely off track with the questions that you had, but I feel like it's a useful observation.
Well, that was our other question with BITO, right? What's going to happen when we get some backwardation, right? Then you might all of a sudden see some nice juice to this for the rolling. So, yeah, there were a lot of questions still. We're maybe starting to see some slight signs of that. We have seen big movements out there in all things Bitcoin as a result. So, yeah, it's not a given that this thing is going to just erode every cycle. There are times when Bitcoin's moving around. We could see a little bit of extra juice baked in there, which makes it also more interesting and more attractive, as Russell was saying out there. So a lot to unpack. Good question. Since we're talking crypto, let's go to this one. This comes from Green Go. As CME always tweets out the show ahead of time. And when they tweeted out recently saying, which product should we talk about? Green Go was all about ETH. He wanted us to talk ETH. He said, ETH, please. Well, unfortunately, there's not a lot of ETH to talk about. There are no ETH options at CME yet over there. But I will say, Green Go, as I go back out to the cryptocurrencies tab, listeners, you guys can find that for yourselves. You're not going to see any options paper, unfortunately. But you can look at some other things, the futures and whatnot. ETH having an interesting run of late out there as well. But no options yet. But you, Mr. Green Go, and everyone else who's interested in ETH, coming up, I think it's on the 6th. So impending. We're going to have the micro ETH futures coming online at CME, and that could be a bit of a game changer. ETH futures, kind of like the Bitcoin futures, a little bit too big for the britches of most retail out there. If you start getting those smaller size contracts, that could be a bit of a game changer. So if you want to play an ETH on a more regulated type exchange where you have actual clearing and everything else like that, then that could be a bit of a game changer. Mr. Rhodes, what are your thoughts, if you have any, on ETH and also the impending launch of the micro ETH futures, sir?
The one thing that I like about the micro futures coming out is it's going to give you an opportunity without a world of risk to trade Ether against Bitcoin, which is something that I've really wanted to do, but haven't had the wherewithal. But also I like to test these things out with smaller contracts. So, other than technically, and I understand the difference between Ether and Bitcoin, and I know they have different uses, but in general, they're both going to benefit from a big macro view and generally trend in the same direction. And with the smaller Ether futures, I think I'm going to have opportunities to trade that like I trade the different indexes that move in line but diverge at times.
And my producer reminding me that we're going to have Tim McCourt, the guy who oversees all things crypto at CME, on the show next week to discuss the launch of micro Ether. So I think we're actually going to have to pre-tape that one a little bit earlier. So going to be messing with the schedule a little bit for TWIFO next week. But yeah, we're going to have a nice discussion about all that. I'll ask him your questions you guys have been asking us about the BITO and the position limits, all sorts of fun stuff to go on next week. So yeah, stay tuned, everyone out there who's excited about ETH. Since we're talking crypto, let's roll out of here on this one, Russell. This comes from TLDS. Yeah, something similar in the Pro Q&A this week as well. He says, are you surprised by the high degree of correlation between the crypto and equity markets? Do you think this is a relatively new phenomenon since Bitcoin was supposed to be uncorrelated to most major markets? And do you think this will persist over time? Mr. Rhodes, another threefer in there. Our listeners are getting in-depth with their questions. What are your thoughts there on crypto, Bitcoin in particular, and its correlation to the equities these days?
Well, I think the correlation to the equities, it's periodic where it kind of comes and goes. Right now, we're in a situation where it's not necessarily crypto correlating with stocks. I think it's more of all financial assets kind of moving together these days due to overall macro systemic concerns. Also, I do know that there are some entities that They think that the different cryptocurrencies are going to be really good inflation hedges. We don't have history behind that, and I think some of the same people that say it'd be a really good inflation hedge will also say it'll be really good if we get deflation. They're going to come up with an excuse to own it either way. I'm not surprised by the high correlation between the two right now because, again, when we end up in these high-risk situations where volatility is high and we're getting bigger knee-jerk reactions than you would expect out of a lot of assets, they all tend to go up and down together. And so I think that's what we're seeing. I don't think he asks if it's a relatively new phenomenon. And I just think it's like a short-term phenomenon, just like I think over the past 30 days, we've actually had VIX and having a positive correlation with the S&P 500. So over shorter periods of time, you're going to see these sorts of things happen. But I do think over a longer period of time, the crypto market will continue to not really correlate well with any of the traditional asset classes.
Yes, the old adage, when it hits the fan, the correlation goes to 1. That's pretty much what we have been seeing in crypto and a lot of other asset classes, as Russell pointed out here. Days like Friday and others, yeah, that's why we've said many times, the only contractually guaranteed inverse correlation you're going to get at the end of the day, listeners, is a put option somewhere. So bear that in mind if you're loading up on crypto or whatever else it is you think is going to save you on that day when the markets turn dark. Well, look at Bitcoin and others. On those crazy days, we have seen Bitcoin move in lockstep to the downside with the equity market. So something to bear in mind if you're looking into that as your completely inversely or uncorrelated segment of your portfolio. But unfortunately, that music means we come to the end. Great show. Love you guys. Have so many questions. Those are always fun for us here on the program. If you have a question, you have a comment, you have a category or a product you'd like us to analyze here on the show, hit us up. Let us know. You know where to find us at Options, most of the major social media platforms, or for those of you in the Secret Club, you can put them in there in the live chat, and as you can see, you get bumped to the top of the list. We like you folks out there. And we also like Mr. Rhodes every now and then. Mr. Rhodes, sir, as you approach the day when you will no longer, at least to you, be the once and future Dr. Vix. If folks want to check out what you're working on, what you're cooking up, where should they go? What should they do?
Still always, anything I write up that goes up on EQ Derivatives is in front of the paywall. So, and it's only my material that goes in front of the paywall. So that's where we're still seeing that. I do think once I get this dissertation behind me, I'm going to go back to something that I think I did a very good job on, and I don't really say positive things about myself very often, but the weekly reviews that I used to do for the volatility markets at SIBO, I'm going to pick that up and start posting those every Saturday through EQ Derivatives. That's a plan that I have now that I'm got a few things off of my plate. So keep an eye out for that as well.
There you go. Keep an eye out for that. In the meantime, of course, you can always give him a follow on the old Twitters at Russell Rhoads, 2 S's, 2 L's, and then Rhoads, RHOADS. He tweets out a lot of good stuff and some weird stuff in between episodes of this fine program. And of course, you know where to go to find more about these reports and everything we talk about on this show. CMEgroup.com/TWIFO or /TWIO are the places to go. And you also know where to go to learn more about all things small caps. How is COVID, now this new Omicron variant, how is it impacting the world of small caps? Only one place to go to find out. FTSERussell.com, FTSERussell.com is the place to go to kick the tires and light the fires. Give them a follow on the old Twitters while you're at it as well. At FTSE Russell, all one word out there. We got to get on out of here, but we'll be back again tomorrow. It's a good week to talk vol. Luckily, we have a show all about that called Volatility Views. That'll be back tomorrow, noon Central, 1 p.m. Eastern, to try to parse the madness that is volatility right now. Back again after that for all of you Secret Club folks with a little bit of the old options oddities. I got a feeling there's going to be some fun, weird trades to parse, so look forward to that. Then we're back again next week with our kickoff show on Monday of the Option Block all the way through to another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.